All right, turning now to housing, with several key data points on tap this week, including the S&P Case-Shiller Home Price Index and new home sales out today. The numbers are offering a fresh look at the housing sector since the Federal Reserve paused its rate hiking campaign for the first time in more than a year, with mortgage rates now hovering right around 7%. That is the highest they've been since back in 2007. Still, with shelter remaining one of the stickiest parts of inflation, is the housing sector likely to face more headwinds? We're going to bring in somebody who may have the answers. That's Bess Freedman, CEO of Brown Harris Stevens, one of the largest privately held real estate companies in the U.S. Bess, good morning.
Hey, Frank. Good morning. So nice to see you. How are you?
Great to see you as well. I'm doing great. So I want to talk to you. We're looking ahead to Case-Shiller and home starts and home prices, things like that. Two big data points coming out. Back in May, we saw median home prices fall by more than 3%. That's generally very encouraging to buyers. What are you expecting from the reports we have coming up?
Yeah, I mean, I'm much more positive than I think analysts have been. I mean, there was all these predictions that it was going to be doom and gloom. There was going to be a crash. But what they didn't realize or think about, I think, is that we're in a different time because homeowners right now have equity and there's no forced selling. Therefore, there's been this sort of constraint on inventory. They haven't had to sell, which have kept prices pretty high. And buyers are still in, even at 6 and 7%. So the market has been much more fluid than I think analysts predicted. It's not post-global financial crisis where they had these mortgages that didn't make sense. Homeowners actually have equity in their homes and they have rates that make sense. And so we're in a different time. And so we're in for a much softer landing, I would say. And it's relatively steady considering it slowed down post this historic run-up after the pandemic, but we're in a decent place. And we're seeing that the sentiment amongst home builders has been very good. So Bess, I'm fairly optimistic.
I like your optimism. I want to go back. You said we're headed towards a soft landing. Now, normally we talk about that for the broader economy with raising rates. In the housing market, what does that mean? Because so many people, as you mentioned, they bought their home with a very low interest rate. They have equity in it, and they're not really pressed to move anywhere.
No, they're not. And that has been part of the challenge with inventory because you have this sort of artificial constraint on selling. People don't need to sell. They're not selling. And so, but we're going to see things ease up a little bit. I know that rates are now hovering at 6 and now they're close to 7%. But I think supply and demand, once we have a healthy intersection, you'll see more movement. We're starting to see prices come down. We needed to see that happen to get more movement. And buyers are coming off the sidelines. They're getting comfortable with these new rates, and we're seeing good movement. Just last week, we saw 32 contracts signed over $4 million in New York, which is a really good prediction that the luxury market is moving and things are doing well. That's the fifth straight week in a row. So, well, I mean...
But Bess, when you're talking those $4 million buyers, that's cash usually, right? That's really high-end people buying with cash, so they're not generally rate sensitive. I want to ask you about something else that's coming down right now. That's rents in many parts of the country. That's not the story in New York City. Rents are still high in New York City. But rents around the country are coming down in certain markets. What does that mean for the housing market? Does that mean people get more comfortable renting? Or does that mean they have more money in their pocket to possibly buy? I'm not really sure which one.
I think there's a little bit of both of those. I think people are comfortable renting, especially because rents are coming down. As you indicated, New York, you're right, it's an outlier. That hasn't happened. The rental market is really in a tough spot right now. People are not getting deals. But I think people are seeing options in home buying right now because even though rates have gone up, they're still historically low. And so it's a place to park your savings, build intergenerational wealth, and people feel comfortable in investing in homes. So I think with the rental market, people are also considering buying versus renting because that's a great place to invest. And it's a place also for consumption. It's not just a place to invest. It's a place where people raise their families and they can pass it on to their kids. It's a great place for people who come from other places who can create homes and places. And, you know, it's something the home buying process, something that is the American dream that people have believed in and will continue to believe in.
You know, Bess, that is an excellent point. Thank you so much for being here, for your time and your insight. Hoping you'll come back and give us some more insight into the housing market.
Thank you, Frank. Have a great day.
You too.